All right, good morning, everybody, and welcome to the Bookmap Pro Trader webinar today with Scott Pulcini. We do this actually with JTrader and Scott. We do this every Wednesday and Thursday. Scott's here every Thursday during the Bookmap Advanced Education, and he's also a part of the Pro Trader webinar this week as well. And he will be trading live. It is in demo. I'll go over that in just a minute here, but it's the view and insight to peeking over the shoulder of a professional trader with futures here. So you guys know Scott's background, pretty interesting background here, and featured in a trading book by Brett Steenbarger. He will have his Scott's contact information. I will put this into the chat so you can reach out to him. He does offer mentoring services and education. I need to go through the disclosures and we'll turn it right over to Scott. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So it's important you understand these disclosures. He will be trading live. It is only for educational purposes and in demo. All right, so with that, take it away, Scott, if you want to share your screen, and then I will rebroadcast it here.
Okay, I can hear
the jumping
guys
in
are
and
entering
out.
around
Yeah,
too.
I'm sorry. I've turned
that.
that off, but I continue to get it back. Anyway,
You have to redo it.
I don't know what's up with it. I'll have to look into it further, but I've gone over it every single time and it's deselected. But anyway, all right. So everyone should be able to see Scott's and my screen. I'm rebroadcasting it here, and it's also in YouTube, streaming live right now. So.
Okay, cool. All right, so this just fired off a NASDAQ. You had almost 200 ICE here, 194. I just drew this zone. Obviously headlines are dominating. You can have the best position on. If something comes out, it means nothing. Just kind of like you're trading right into a number, right? I mean, the volume, real-time volume is the number one driver of all markets. But if something comes out, you can have the best volume setup, and that's out the window. So, and that's been happening a lot lately. So, what I tell my trade room is, if you're going to trade this environment, you accept the risks. I've accepted the risks, but it doesn't mean I still don't complain about it, because it's been a little ridiculous lately. Because especially you don't know what headlines are fake or who's putting them out, so on and so forth. But it doesn't matter, because the algos that run at least 80 to 85% of the market, when they these news headline algos, when they see the headlines, they just fire off the orders, and you're out of luck. So that's the risk you take in trading in these markets. It's very volatile. I think it's too volatile, but again, it's volatile, but then there's uncertainty as well with the headlines. So point of that rant is just be careful in this market environment if you're going to trade it. So I got this zone in NASDAQ. We'll come back to that in a second. I am long ES. I've been long for a while, since right after the open. You can see here there was a bunch of sell ice down here. You had all this sell ice here. So this is like 700, 400, 400, 500, and 500. So there's two different zones here. So the second one, the most recent one was, if I can get my drawer here, was this one. And I traded aggressively out of this zone. So the definition aggressive for me is trading 80% of a 5-minute ATR. So at the time, ATR was 7.29, so that was 5.83 points out of that zone, so 6 points out of the zone I got long. It actually did the patented retest failure. So we did get the full ATR. We retested the zone, and then it took off. So you could have, if you're waiting for a conservative entry, you could have got in that way as well. So the reason I was aggressive down here, and if you guys have been watching the webinars lately, I am using these Ludwig levels. They're absolutely incredible. You can find them at ludwiglevels.com. Just say you saw them on the Bookmap webinar, and she'll give you some goodies. But these things are incredible for support, resistance, for targets, so on and so forth. So anyway, we were down at this blue lug, as you can see, which is support. This is red lug is resistance, and then yellow is directional. We'll go through this, during the webinar. But you can see I kept trying to get through this blue lug, and I saw a volume setup, and that was go time. So if we're below the yellow lug, directional lug, for me to go long, I need to see what I just showed you, where say we get a bullish setup, and I need to see a full retest of the pretend this is a setup. I need to see a full ATR retest failure for it to go long. But if we're at the blue lug and I get a setup, I go long aggressively. So that's what I did there. Again, it retested anyway, but I don't take the chance for a retest at the blue lug because I know how powerful they are when it bounces off there. So I've basically been long this whole time. I went all the way up to 52. I'm still in it. There was no reason to get out there. So the reasons I will get out of some is you kind of see we stopped in the middle of nowhere. So it wasn't like there was VWAP. We got through VWAP. There was nothing here. So I'm not getting out until we either get to the yellow lug. I'll get out of a couple. Ultimate destination is the red lug if things go correctly, or if I see an opposing setup. So if this thing starts to move up here and I get a SI indicator setup, kind of like how I got in, then I will get out of the trade, right? Because I don't ignore. So say this comes up here and you get some more sell ice, right? And it fails 80% of an ATR out of that zone, well, I'll be out of the trade. But until that happens, I sit in the trade. And that's, the number one thing traders,
Stop sell CL 247 contracts.
unsuccessful traders can't do is sit in trades, right? So when you have things like the volume and these Ludwig levels, again, I can sit in this trade because I've seen this happen so many times where we'll here and here, and these are my targets, right? These are my targets unless I see an opposing setup. And then you just sit in the trade, you let the algos play their games with you, and then eventually it should get there. If something happens and we do get a bearish setup, like say this comes up here and we get a bearish setup, again, I will get out 80% of an ATR. You shouldn't see bearish setups. Well, actually, we are below the yellow lug, so I take that back. But if I see a bearish setup, I will end up getting out, and then if it goes ATR retest failure, I'll go short. I take that back too. I'm sorry, I keep forgetting where we're at. Let's start over. So if this comes up here right now, and I get a bearish setup, let me show you on this screen because it'll be easier to understand. Because we're below the yellow lug, right? So I base my aggressiveness if we're above or below the yellow lug based on the setup, right? So say we come up here, we get a setup, we fail, I'm out of this long, and then I'll actually flip and go short aggressively because we're below the yellow lug, right? So sorry for that confusion right there. I was forgetting where we're at. All right, let's see. Crude been real crazy lately. ATR right now is, again, 94 ticks. That's just, the other day it was like 140. So, if you're trading this stuff, the volatility is crazy. You got to cut down your size. We talk about this every week of using like a risk calculator based on your account size, so you're not over trading your account. And then you also got to be ready for a headline, right? Not that you're ready for it, but you have to accept you can have a great position on and something's going to screw it up. So, especially in crude. So we'll trade this if the opportunity is here, but I am not holding my breath. Something silly won't come out headline wise. All right, so we're basically still in this zone. Let's see where we are on the lugs. We call them lugs, the short for Ludwig levels, obviously, because I don't feel like saying Ludwig level 45,000 times in a day. So you can see here. So there's some theses with the Ludwig levels as well. And again, I posted that webinar I had with Pamela Ludwig multiple times in here. If someone can post it again if there's questions, if no one has seen it. It's just her and I discussing the best way to use these, because she's just used them, always used them. She's been around for like 11, 12 years, and she's just used them basically just trading off lower levels. And what we discussed is how she uses them, and the certain factors that she looks at to take trades. And then, I kind of explained to her during that webinar, hey, if you can apply real-time volume with your levels, you have something incredible, right? So anyway, one of the main things she talks about right at the beginning of the webinar is, if you get above directional yellow, as you see here, and you do not tag red, that's a warning sign. It doesn't mean it can't do this and then come back and tag red, but if you don't tag red and then you get back below yellow, that's where you should be going, right? So right now, my thesis is short. I'm expecting that, and since we're below the yellow lug now, I will take this setup aggressively, meaning, so 98, you can see the 5-minute ATR is 98 ticks, so I take 80% of the ATR, 78.4, so 79 ticks below here, I will go short. So this is the most I can trade as a one lot in here, right? And again, if your account size is not big enough, you should be trading micros, and if it's not big enough for micros, then you shouldn't be trading right now, right? So if I have to, so let's first do this. So I would be in 80 ticks below here, 79 ticks below here, puts me at 18, 28, 38. So I can enter this trade at 108.38. So if I get filled on that, I have to then risk, this is the way I trade, right? So I know traders watch this and they're like, well, what the hell? I don't want to be risking, 150 ticks. I want to get in, and I want to get in right here, and I want to stop out. I want to risk only 10 ticks or 20 ticks. Well, guess what? The market doesn't care what you want to risk. This market is ridiculously volatile. If you get in and you just risk, 10, 20 ticks in the middle of a zone, the very good likelihood you're going to get stopped out of the trade, right? So after 3 years watching thousands and thousands and thousands of these setups, I have determined for myself the best way to trade these areas is the way I'm trading them, as far as 80% of an ATR. If I want to enter conservatively, I wait for full ATR retest failure, things like that. It doesn't mean you have to trade it that way, but I'm just telling you, learn from my experience of watching so many setups over the years, that this is the best way to trade them. But what I say every webinar, this is a science. This is the science. There's no disputing this was a 228 lot stop run. How you play these areas, that's up to you. I'm just telling you, you may want to take my version and kind of put your own spin on it. But again, if you're just getting in, so for instance, I get filled right here and I say, I only want to risk 30 ticks, you are almost guaranteed this will pop up and stop you out, because this area means nothing without real-time volume, right? So I'm now short, and my stop will now go a sweet 79 ticks above this zone. So that puts me at 110.60, 110.59. Again, it looks ridiculous, but this thing is moving 300-400 ticks at a time. So it's not, you're just adjusting to the volatility is all you're doing. And you can see, here's another thing we look for, the trade. This trade's in my favor from what I've seen in these markets, right? So you can see here, this liquidity, right? So these are big orders in the order book. What do you see up here? Nothing. Black hole, right? So again, traders that don't know what they're looking at, they look at all these bids and they're like, you see these bids. All it's showing you is the order book in this format, right? Which is much easier to figure out what's a lot, what's a little, right? Most traders look at this and say, wow, someone really wants to buy, I want to get long. It's actually the opposite. Someone wants to buy, and the big money could push the market around, and they will get the market to fill their orders, and then it can go up, right? So what I tell my room every day is, okay, just because you see this liquidity here right now, it doesn't mean we could, but it doesn't mean it's just going to pick it off. It could do this, it could do all that, could stop me out, could play games, but you can. The odds are, by the end of the day, all this liquidity will get filled. So it just helps you determine the direction for the day, right? And you use things like that, and then you for your traditional bar chart structure readers, which I am, right? You want to know where we are in the bigger picture. And you can see here, let's see what's going on here. I still got this position on. So again, I'm still in this trade until I see an opposing setup and or the yellow lug, and I still will be. I'll get out of a couple, come back to crude here in a second. Let's see. Yeah, see, there's nothing here. So, what some guys trade off of, and this is what I'm talking about, coming up with your own trade plan. You just have to be consistent in doing it. Some guys will get out at VWAP, right? So say they get long here, they get out of a couple of VWAP. That's fine. Some people get out at daily value area. What's daily value area? That's one standard deviation away from VWAP. Because the reason is, a lot of these algos play reversion to the mean. So when you hit these areas, like here, you'll probably see some kind of reaction, right? So you can get out there. Here's 1.5 standard deviation from VWAP. Here's 2 standard deviation from VWAP, which is going to be real close to confluent with the yellow lug. So unless, again, I see a setup that is bearish, I'm going to hold this thing, and hopefully we can get up there, and I'll probably get out of 1 or 2, and I'm going to hold at least 1 and see if we can make it all the way to the red lug. And if we get a setup that's bullish, I will add to this trade as well. Again, we're below the yellow lug, so for me to add, I would need to see, so here, say that's your setup, I need to see full ATR retest failure.
S&P iceberg by ES.
Here we go.
700 contracts.
So this is what I'm talking about. Now, I can trail this stop and or add to the trade. 700, that's my threshold, right? Let's mark this up. And I'll go over here. There's always questions on how to draw these zones. I know it seems confusing, but it's really not. It doesn't get much more simple, but we'll go over here in a second. That's not actually right. Let's see. I forgot my little waterboarding. It's not waterboarding. We'll go over this too. It's not waterboarding. I call it waterboarding because it's torture. When you have a position on going against you, you get to watch it and hear it. And that's not so fun. But when it's going your way, it's actually really fun. It's like an amusement ride. And that noise in the background is financial juice. It's the squawk box that obviously is very important these days. It doesn't really matter. I mean, basically what you're going to know, you're going to find out is why you got run over, because you are not going to be fast enough to trade the headlines, right? So it's just good to hear why you got crushed, but you're really not going to be able to react to it most times. All right, so what I'm going to do here quickly, if I can find my ATR is 8.77, right? So 80% of 8.77 is 7.01. So I round up, so I'm going to go 7.25 points below here, and that's where I'll stop out of the trade. So this is 50-50. It's 53.50. 53.25. I'm sorry, 43.25 is where I'll stop out of this trade. Hold on 1 second here. I gotta let my auto trader guys know what I'm doing. Oops. Questions first while I'm typing this in.
Sorry, Scott, lost you there for a minute.
I said, is there any questions? I'm typing that in. I was just typing something to the auto trader because I'm long on that as well. So I just was seeing while I was pausing if there's any questions, but maybe not. You can hear me, right?
Yeah, sorry.
Okay.
Just a second here. Just answering somebody here. All right. And questions.
All right, so while you look at that, so this is the setup. I try to make the icebergs, same color. So I use blue for buy icebergs, black for sell icebergs. And I'm sure there's a lot of new people on here that don't even know what the hell I'm talking about when I say icebergs. So icebergs are hidden large orders that come through that they can literally hide them in the order book. And you can't see them in the dome, depth of market. So dome means depth of market. You can't see them in here, right? But when it comes down and the price trades, all of a sudden the market runs into a blob. That's what they call an iceberg. It's like running into an iceberg, right? So they're hidden orders that populate once they start getting traded into. So you can see here, this market came up here and they started to sell it and ran right into icebergs, right? So that's what an iceberg is. So again, I am stopping out of this trade now. This should not get 80% below here. If it does, this has a potential to turn into a bearish setup, right? So then I will be actually what I'm going to do here, what I'm supposed to do, right? Because we're below the yellow lug. Not only will I stop out of that, I will enter short, right? We'll go over that here on the lugs in one more second. But right now, I'm going to hold this and hope we can move higher. So if we move higher, what I'll do, again, because we're still below the yellow lug, I need to see a full ATR, so 8, it's up to 9 now, 9.1. Here, actually, I got to adjust the stop too. 9.19, 7.27, so that's 7.5. So I can move this down to 43. So what I just did is I put in the 5-minute ATR that's now up. So this is like a dynamic way to trail your stops and so on and so forth. You're adjusting the volatility. It's up to 9 points. 80% of that is 7.27. So now my stop is 7, and I round up, so 7.5 points below this zone, which I'm about to be stopped out. And then I'll be short. So then the reason I'm going to
stop sell NQ 203 contracts.
I forgot to, there might be a trade in NQ here. So anyway, the reason I'm getting short is because we're still below the yellow lug, right? So again, I gave that every opportunity to roll, and then you got a setup that is about to be a bearish setup. It is a bearish setup, right? So now what do? Now I put my stop for this short, 7.5 points above this zone. Actually, might have too many on here because the volatility is, I do have too many on. Hold on a second. I should only have, and we'll go over this here too as well as far as the, I'm judging my contract size. So this top of this zone's at 50.50, right? So I'm going 7.5 points above there. 57.75 is my stop. So the reason I went aggressive short, I stopped out and went aggressive short because we're below the yellow lug. If we were above the yellow lug, then I would have needed to see full ATR retest failure. Then I would have got short. But so, let's see what happens here. Nasdaq is actually coming back to that zone. So this is that buy ice that we drew right here. We obviously moved an ATR, well over an ATR above there. The ATR in Nasdaq is 42.88, so 43 points. That was almost 100 points away. Let's see where we are in the lugs.
Soybean ice for sell DS 160 per contract.
Right, we want to pay attention to grains too, because I'm in absolutely crushing grains, crushing beans. No pun intended. For you grain people, because of the bean crush.
Yeah,
anyway, so
I think it
was
was intended, but that's okay.
What'd you say?
I think it was intended, but that's okay.
Yeah, you've heard enough of my webinars. It was. You win. All right, so this is where that ice was. We're above the yellow lug. We did get a full ATR. So the reason I didn't go long initially, because actually the ice was down here and we were below the yellow lug. But now we've gotten above. If we come back and retest that ice area that I'm about to show you again, and we bounce off here and go 80% of an ATR, I'm going to go long, which I'm hoping doesn't happen because I really don't feel like having dueling positions on between NASDAQ and ES. But it is what it is. I trade my zones independently, or my contracts independently, right? I'm not saying, well, I'm short ES, so I'm not going to go long NASDAQ. I have to play my areas, right? The whole idea with this is you want to trade like an algo. You have your rules and you follow your rules, and that's it. Because the only way you're going to compete with algos is if you trade like an algo. If you trade like a human, you're going to lose money because trust me, I used to have some of the best intuition out of anybody, being a scalper in and out all day long. Again, back then I used to trade 50,000 contracts a day, round turns in the E-mini S&P, and that's when I was only trading 500,000 in a day. So I was 10% of the volume every day. So I had some pretty good intuition, right? Nowadays, my intuition is basically backwards. So that's why you have to rely on your rules and your setups, because when I have a feeling something's going to happen, it's usually wrong, because these algos are built to go against human nature. And that's why trading is so hard, because you have to literally go against your human nature. Let's see what's going on in soybeans. I'm going to show you this wheat. I don't even want to go back to wheat. It's very disturbing. I missed a monster trade this morning because I got up away from my desk. All right, so let's see here. 300, so threshold in beans it's 150. I like to see over 200, but this is definitely threshold. Hopefully I didn't miss a trade in here as well. When you see the wheat trade, it's very, very sad. All right, so we got that. So that was buy ice, obviously. So, for you newer people that don't understand how to draw these, right? All you do is you come up here, you get a little crosshair, right? And then you spread out your chart, scroll it out, and pick up all the prices that occurred in this spike down here, right? So that spike happened. Should probably got this. Well, maybe not. Say I had it too high. Let's see. Right, so you can see I incorporated. Yeah, this is a little high for where it started, but it ended up coming up here and it was still inside the spike. So I got to put my zone up to here and down to here. That was the low of the area, the low price of the spike, right? So spike, I'm meaning buy ice there. So that's that zone. We're launching out of here right now. Next step, look at your lugs, Ludwig levels. It's not what you want to see. What's the problem with this? Uh-oh. What happened with these? It's not good. So working last night. No idea. It's showing me like ES prices. Huh. All right, well, for the meantime, I don't have time to mess with that. So if we were above the yellow lug, I would have taken this trade aggressively, but either way, I will take this trade. If we get a full ATR above, retest fail, I'll go long. So next step is ATR, as you can see right in here, 4.21. So I need to see 4.25 points out of here, which we got. Retest failure, I'm in 80% of an ATR long. I really wish I knew what the lugs look like, but again, I would be getting this in this position regardless on a full ATR retest failure. The problem is if they were working, I would know for that contract anyway. I would have been in aggressively 80%, right? So I may miss this trade just like I missed wheat. Might as well just show you this right now to get it out of the way because it's making me sick to my stomach. You can see this trade earlier on, just unbelievable. And then you even got, so you had sell ice here, see it right here. This is what you call, so this is one of my 6 setups. This is called Titanic setup, right? So sell ice came in, you can see this heavy buying, it ran right into a mouthful of sell ice. We even got the full ATR away. This is definitely an ATR away because this was almost 20 cents. Came back, retested perfectly, failed, monster, huge. Look at this trade that I missed. This just makes me so sad. Look at this. This is like a 40 plus cent trade, 50 cent trade. So again, it's the exact same tick increments as E-mini S&P. So it's like missing a 50-point E-mini S&P trade. Very, very sad. So I might as well just continue the streak here and see if I miss this one too. But it's not my fault. I don't know what the problem is for these lugs. I could restart my lugs, but that's going to be a big pain. So I'm not going to do that right now. All right, so probably missed that trade as well. Grains I've just been literally killing soybeans. All right, so here's the retest of the zone now on NASDAQ. Let's see what my ES short looks like. So you can see, what are we doing here? Came back to the prior zone and it bounced right off of there. So I may, depending on where we're at here, I may get out of one into this prior zone. Because prior volume zone, so this is real close, so you can see this, we call these baby lugs. See this right here, called target, and then this is the major lug. We could bounce right off of here. I may pop out of one here. Because we're so close to the blue lug, again, I don't mess around with the blue lug, right? I'm gonna get out of one right there, but if we get down to this blue lug, I'm getting out of the other one and I'm just gonna wait and see what happens, because again, these things are so powerful. What I want to see then is us to move lower and then build new lugs, and then I'll get back in short. But I do not hold shorts hoping we build new lugs, right? What do I mean by building new lugs? Like this right here, Right? So you can see we came up here yesterday afternoon and we built new lugs, right? And one of the things, again, when we talk about in the Pamela Ludwig webinar is when you build new lugs, if it's going to continue, you want it to hold directional yellow and prior red. And you can see it it looked like it was going to, and then once it got below prior red, gone, and your target's blue, and that's what it hit. So my point is, like, I'm getting out of this trade right now, and I will wait and see what's doing. Right at the blue log. So I don't need to see a volume setup in this instance. I am out at the blue log, right? And I'm going to wait for another setup. So we traded that pretty well, right? I mean, look how well these zones work, guys. Like, this is not just like flipping a coin. Buy ice. This is another setup in my 6 setups. It's called broken ice. Someone tried to hold this market down, wrong, puke. Then we got broken ice up here too. Someone tried to put buy ice in, they're wrong, right? So it's not a coincidence this thing stopped here. Why did it stop there? Well, there's buy ice that was incorrect. And then when the big parties are wrong, or a lot of the times, then they have to puke them out, right? So that's the whole. And again, what I explain to people, like these setups in my course that I trade off of, it's not hypothetical stuff. It's when I was a large trader, how I would react when I was caught, when I was right. And back then you can see counterparty. I say this every webinar, you can see counterparty. So I'd have a little box down here, and every time I put a trade in, I would literally, so say we come down here and there was like 1,000 lot here, I would sit there and ping it with 1 lots, and it would show 1, 1, 1, 1, 1, and it would show me who the house was, meaning who's the counterparty. So I'd see like 910, 990, which was my absolute nemesis, 714, I can't remember, we were 023. Anybody old trader back then would know these very well. But anyway, I would see who I was trading against, and I can see when. So say I would just come down here and I'd see the 1,000 lot, and I'd sell them 1,000, and I'd look over and I'd see all of them were 990. I'm like, okay, and then so I know it's him, right? Him. They had one big trader there that was I would go head to head against every day, and then. Say we go down a little further and there'd be another 1,000 lot, and I'd sell him another 1,000. I'd look over and I'd see 990, and I'm like, okay, now he's loaded up with 2,000. And I'd be saying, so he's long 2,000, I'm short. So I'm like, okay. And when you trade against the same people every day, you start to realize how many they could put on, what's their like limit. And that guy back then could put on like 5,000 contracts. So I would just watch and I'd say, okay. And then if I knew I had him, I would just step on the gas, and then he'd turn around and puke them all out, right? So that was the game. These markets are nothing but games, right? And they're still nothing but games. And what I tell my room every day is, you can sit there and complain that, this is impossible, it's manipulated, so on and so forth. I approach it. I used to be like that too. Trust me, especially when I got knocked out of the game, when I went from millionaire to not a millionaire because I couldn't make money anymore scalping. I was the same way, right? Like, this is fixed, this is so rigged, blah, blah, blah. Well, with this information that you see here, you now get to participate in the game. You know what the game is, right? So if you can't beat them, join them. Say it every webinar, right? This is the game. This is the game. If you know how the market reacts to these areas, you can participate in the game and be successful. Most traders have absolutely no idea what any of this is, and they're not using the most important part of trading, is real-time buying. It is the driver. I don't care what lines you have on your chart. People, they get fooled by, when they're watching, they're looking at charts and they're like, well, this, this, say VWAP is right there. Well, this bounced off VWAP. VWAP is a great trade. Well, when I learned how to trade, I was the same way. I was like, okay, well, but I wanted to know, well, how come this time when I came up to VWAP and went right through it? Like, what was the reason? How come it didn't reject at that time? Well, the reason is because of the real-time volume. So you can have the best lines on the chart, the best indicators, including Ludwig levels, and they're not as important as if you understand what the real volume is doing at those areas, right? Every day I say, I'm sorry, guys, for those who've been on my webinars, my hundreds of webinars I've done. I say the same thing because it's just what it is, right? All right, I need a breath. Any questions, Bruce? Get rid of this. Let's check our crude short. Sure, it's a dandy. Oh yeah, already stopped out. Look at that. That's just nuts. I shouldn't even be trading this thing. It's just too volatile. It's too volatile. If it's something sniffs a headline, the thing just turns around and rips. Look at this. I actually had over 100 ticks in this trade. And then here's another thing, you guys, for lessons. So you see this liquidity, right? Many times, first time down in liquidity, the algos pick up this big order in the book, and it's big relatively, right, compared to this stuff. It'll run the market away from the liquidity. Trust me, it'll get back down here eventually. But if I was watching this, we were on something else, I probably would have gotten out. We talk about this in my room every day, especially in this market. I probably would have bailed out of one there when it started to run away from this liquidity, because I just know that game as well. Once again, if you know the games, you're joining them. I'm really hoping that was not a level. No, it was not. So, oh well. So that was at least I didn't have to watch it. Just a quick pull the Band-Aid off trade there. Let's see what's on that. Any questions, Bruce?
Yeah.
I need to stop talking for a couple seconds.
Let's see. Gazoo's asking about your ATR. Is that at 80% or 75%? 5-minute ATR.
It used to be 75. I moved it to 80 because I kept getting stopped to the exact tick. So I moved it to 80, and it's been a lot better. I still get stopped to the exact tick, as you guys see every webinar, about 10 times a day, but it's better. So I moved it to 80. Again, you can, that's how I trade it. If you watch enough setups and you say, you know what, I like this approach. I like getting in at half an ATRs. You do whatever you want. It's your money. I'm just showing you guys how I trade after watching this stuff for thousands of setups. What was the guy's name? Kazoo?
Yeah, Kazoo, like in the Flintstones. Yeah.
That's what I see. All we did is just show how old we are, by the way, because nobody under the age of 40 knows what the hell we're talking about, by the way. So you just showed that you're almost 80, Bruce.
I'm getting there.
I just turned 50. I just turned 50 last week.
Yeah,
wishing you happy birthday.
Yeah, happy birthday. I'm a few years ahead of you, not much, but a few. So let's see. Oh, okay. So yeah, Justin, looks like you're getting answered there about the Ludwig levels. So that should answer your question. And no, I think we're kind of caught up. No, hold on. YouTube, there's a question over here. What your sweeps for your Black Mamba and White Snake settings are.
Let's see in here. I'm sure there hasn't been any. Hopefully I have this set up right. So for some reason, and again, I need to go back. I keep saying I just haven't had a chance lately to go back and do research on these sweeps. Sweeps are way more threshold wise. So if you want to play a sweep, let's find a market that had a sweep in it today. Obviously, there were no 800 lot sweeps in yes. Let's see if we can find one here. Oh, and by the way, this zone now in NASDAQ is negated, right? Because, here's a sweep right here. We'll go over this in a second. This came out here. Actually, I missed this. What am I doing? Let's see. Yeah, this was definitely a setup. You can see the sweeps correspond with it too. So this was a 200 lot stop run, right? And there were another 700 or 500 behind that. So there were 200 sweeps here. Here's a white snake, and here's another. Bruce does not like when I call them snakes, but I like it because it's funny. So, and they look like snakes, right? So what I'm going to do, I'm just going to incorporate all of these sweeps. So you got this sweep and then this sweep. So this is actually the newest zone that I could trade off of, and I probably would already be in this trade because I think we're below the yellow lug. There's another trade that I missed, and as you guys all know, every trade I miss works out absolutely perfectly every single time, like the wheat trade. Let's see here. So what I was saying before I saw this was this zone is negated because we got a full ATR above it. This one here, that was the bias earlier. And now we got a full ATR below it. So that's done. That's erased. The newest zone is this stop run and snake. So what I was trying to get at with the quantities, you got to be careful, and I don't really have an explanation for it. The snakes are always much higher, or the sweeps. I refer to them as sweeps on the webinar. The sweeps are much higher than my setups in the stop run, right? So like for instance, if I see a 200 lot stop in NASDAQ, I'm drawing a zone and I'm trading off it. Well, a 200 lot sweep in NASDAQ is nothing, which I know it doesn't make sense, but for some reason that's the way it is. So 678, that's a lot, right? Or another
Well,
400, 500 behind the stop run.
yeah, no,
My
these are
point is, if you're going to go
Scott. No, no, I mean it's like not all are, it's just a larger player dumping, and then triggering 200 stops in there along the way.
no, no, no. And I understand that. I understand it's combining, but what I'm saying is the market doesn't respect the area, the volume area on a sweep versus one of the setups stop or iceberg, right? So for instance, if this was a 700 lot stop run, I'd be like, oh my God, that is incredible. That's huge. This area is going to hold. The area is going to be a difference maker, right? When I see 600 lot, 700 lot sweep, whether it's part stops or not, the market doesn't respond to it as well, is all I'm saying,
Oh,
right?
okay.
So icebergs and stops, the market, that's what I trade off of because the market responds to those areas. You need to see the threshold for sweeps are much higher, is what I'm saying, to draw zones off of.
Yeah,
If
yeah,
that makes
yeah.
sense.
Understood.
Yeah, no, I understand that the sweeps, part of them was a big player just dropping them in, and part of them was somebody getting stopped out, the
Yeah.
retail trader getting stopped out, right? All right, so let's see what I missed here. Let's see where we are on the lugs. Well, we were above, so I would not have gotten there aggressively, but I will trade this retest failure short if we can get up here. So that'll probably take a while. We'll keep an eye on that unless something new comes in. No. What else? All right, yeah, you're getting a retest right here of soybeans. So I will trade this to the long side. You guys will just see these setups all day, every futures market. It doesn't matter. Volume is volume. You just need to know your thresholds and your setups, and then you have the ultimate edge. So anyway, this was definitely an ATR. Here's your retest. 80% out of here, I will go long. And people that don't understand these or are new to this are like, well, why wouldn't you just go long right here? Well, you could, right? But there's nothing saying that this isn't going to go right through here now. So from my experience, the best trades are waiting to see this area hold and move away 80% of an ATR. That's the better trade. Yeah, you have to risk more on the trade, but it's a more sure trade than just hoping that this area holds on the retest, right? That's why I do that. But you can say, screw that. I want to get in right here. I think this area is going to hold. Fine. Do whatever you want to do. Again, it's your money. But this is, again, from watching thousands of these setups. I found the best way, the less risky way to trade these things is to wait to prove, let the area confirm itself and then get in 80% of an ATR, right? So if that's confusing. That's why I do that. There are instances where I will get in. I've done it a few times in my room in the last month where I did it one time in ES. It had this exact look and it came in and it was right in the middle of the zone, but it was confluent. There was the yellow lug was there. We had VWAP there. And I'm like, you know what? I'm going to take a chance and I'm going to put on a few right here. And then I'll play my traditional entry and I'll add to it. And it actually worked out. It turned out to be like a 40-point trade. There are instances where you can do it, but what I tell, especially new members, guys that, new guys that get the course or get the new guys that get the course and they don't really know what they're doing, I highly recommend you trade them the conservative route to start, and then as you get better understanding them, then you can put your own spin on it, right? But I'm just telling you, it's from my experience. It's not that I like to risk more. I've just noticed it's just you have better odds of a successful trade. So ATR in here is 4.13. So that is 80% of that is 3.3, so 3.5 I round up, 3.5 points out of here. I will go long, and I think I can only put on 3 here, so that's 89.75, 90 quarter. What happened to what's going on with soybeans today? I lost my bid column here. So Bruce, how do I just without bringing up a whole new dome setup, how do I just bring up a bid column? What do I do here?
Right click in there. Go to Trading Dome.
Right.
And then select orders.
Orders?
Yeah, try that. Oh,
Because I
I'm
usually
sorry.
have to add default dome columns, and it adds like 12 columns.
So hold on, market depth. Do market depth.
No, that's not
And
it.
then, yeah. I mean, then right click in there and then
Okay.
configure, go to configure. And you should be able to configure that to what you want, like just show the bid depth. Yeah, select that.
Well,
There you
how
go.
come it's still showing me an offer on this side?
So there's a kind of it's under display, like you see the kind of like it's just, yeah, see that one up there, just click on that, yeah, so it doesn't
It's not
no, the
clicking.
blue one,
This?
yes, there, should do that.
Still showing me red. So what I usually have to do, we'll just
So
do
no,
this now. This is what I usually,
here's another way. Just um, uh, delete that one and go to ask. Okay, right click, no, go down a little bit lower, right click, and then do insert column. Okay, and then right click in that one again, and then configure, and then configure it to, yeah, same back to here. So go to bid, deselect, yeah, there you go, and then deselect the colors there.
how do you deselect the colors?
No,
It's got a, and I'm colorblind, so I can't see which one green is. Is that green? No. This is fun.
yeah,
So what I usually do is just go, all right, that's good enough for now. What I usually do is I'll just click on this and then I'll go to Trading Dome and then add default columns.
sure,
Right?
and then just delete the other columns.
And just delete, right?
But
Exactly.
yeah, I mean, just by doing this and then configuring, you can get whatever you want, basically.
Why is it still saying? Why does it still say ask though?
Well, just go up to title and then put in bid up on the top. It says title. Yeah, no, one more down. No, where it says title ask in the box. Yeah, there.
No.
Now
Right,
type.
but will it still put it? I'm
No,
not worried about what it says. I'm worried about will it still put it in as a bid?
Yeah,
You know what I'm
yeah.
saying?
It's on the bid. Yeah.
Oh, see, it's still coming up as a sell column. That's what I'm talking about.
Okay,
I
so
don't care about what it says.
okay, right click again.
Okay.
Configure.
Yeah.
Okay, and then see it says under sell there, like, so turn it to buy. The very bottom, actions.
Oh, okay.
That's how you
Till
do
I
it.
haven't,
So no, the arrow to there you go.
till I haven't done this. Where do you change it to?
So
Okay, let's just do this. Unless you want to explain it for
no,
people.
we'll do this another time. I'm taking up way too much time in your webinar. I'm
Right.
sorry
All
about
right. So
that.
let's just do this. This is what I usually do.
Yeah,
Makes it easy for me, right?
yeah,
So
and
then
then
I
just
just start
delete the
deleting
other
columns.
ones. Yeah. This is the default on the dome configuration.
All right. Sorry about that, guys. All right. So
Yeah,
three,
sorry.
three, 3.5 points out of here is 80, 90 and a quarter, where I will go long. You think I know how to use this, using it for 3 years, but not so much. I just know how to use it in the basic sense. I don't want to confuse myself. All right, so that never retested, so it looks like ES is still falling off the table, which I'm fine with, right? We came into that blue lug. I'm fine with that, getting out there. And I'm just waiting now. There we're just kind of just bouncing around this prior buy ice that got run over, right? So many times when this stuff gets smoked, when it comes back, that's what the retest failure is, right? The guys that got smoked are holding their breath, and when it comes back, they start to peel out of their trades. They have a bunch of bids in, and they don't get filled, and they start to chase it out of here. So that's what retest failure, the whole concept behind that is, because that's how I used to trade. All right, so let's see if we get some new lugs here in ES. Sorry, that's my squawk in the background, but I can't turn it down without turning down the alerts. All right, we're still here. Let's see if we get any new lugs. No. All right, still hovering at the blue. All Any other questions, Bruce?
Yeah, a few questions coming in. Let's see on YouTube. So hold on. So yeah, Ranak is asking about which is the best indicator or one you like the most in Bookmap.
Well, the SI indicator is number one. I don't use a ton, like especially on the Bookmap charts. I have the SI indicator. I have on chart, SI on chart. You just want to be careful with that because people get confused with this, right? So I like to see concentrated volume in an area. That's what stops markets or where markets react, right? When you have the on chart, it's showing you icebergs, but it's showing you, for instance, let's see if I can find an example here. It'll show you, I'll look for an example, but it'll show you, say, for instance, there's like a 3,000 lot iceberg, say it's all at this price, right? Buy iceberg. And we come down and we touch it and it'll show on your chart. I don't know why. Here, let's do it this way. Just make this less of a threshold. Hopefully we can see this. Actually, I don't want to see that. Why is it? I don't know why that keeps going to. Neither. Why is this on, why won't this go to 0? I try to delete the aggregate. Let's just do this for now. I don't know why that's not working either. It's not working. Oh, here you go. So you can see there's this tiny iceberg coming in. You see this little spike? That's what this is, right? And it's still there. So this can turn into a big iceberg. This means this is basically one house that has a buy iceberg here, right? So my point is you got to be careful because, and what you have selected as far as what it's showing you, because say the market does this, see how this is still getting hit? See this spiking? This is one house that has a big iceberg. See how the market's like running into it and it's really not doing anything? So what you want to be careful of, it'll show you the icebergs that transacted and then it'll move away and it'll come back and then it'll transact another 300 and another 300. And it could be a 3,000 lot iceberg, but it's spread out over like 20 minutes, right? That is not going to like affect the market as much than running dead into a 3,000 lot iceberg on the spot. And that's what the subchart shows you. So that's where you have to be careful with the on-chart information.
Yeah, and
So
you're filtering for the on chart so you don't clutter up your on chart where the subchart is going to show you everything.
Right. And the subchart shows you concentration, right? So this one and that's the other thing, right? So I have thresholds where I will trade or not trade. This is another mistake people get when they first get this SI indicator. They get all giddy and they see a spike and they just trade it. This is not enough. 200 lots, a 281 lot iceberg in S&P is nothing, or ES is nothing, right? So it's not going to, you want market moving volume. Market moving volume from my studies, from trading this again, thousands and thousands of time. In my course that I did almost 2 years ago now, the thresholds are almost exactly the same to this day, which is pretty impressive because I only was watching it at that time for like four months. But my settings in here, I'll show you. You go here and you can see 500 for icebergs. I'm sorry, 500 for stops over a 10-second period because you want to see stops are quick. They're not. You don't want to see like a minute worth of stops because that's not giving you a true indication of what's going on right at that moment, right? So 500 on the stops for 10 seconds, 700 for icebergs for 60 seconds, for a minute, right? You want to give them at least a minute to materialize. So those are the volume thresholds that I have determined from trading so many of these that make a difference, that will move the market, that the market respects, right? 200, the market does not respect, or it's not going to make a difference in the market, most times. So just be careful when you get this on your charts. You're not just trading every spike on this SI indicator, right? And you also want to be careful too. Once you get this, if you watch the course, you get the thresholds and you're like, I had this happen right when I released the course back in that day where it was actually a NASDAQ, and it was a day where NASDAQ was going crazy. And just like volatility, volume increases on certain days too, right? So it was like, in the course, I have 100 or 120 as my threshold, right? And that day it was like 180, 220, 220, 180, right? It was over threshold like every 3 minutes. And I would get an email like, well, I don't understand. I was taking these setups. They were 100. I saw 100 iceberg and I took them and it kept going right through them. I don't understand. You got to use a little judgment on a day where you're seeing, almost twice threshold. You don't want to be using your normal 100, 120 threshold, right? You need to say, okay, today I got to increase my thresholds because you should only be seeing these setups a few times a day, 5 times a day max usually, right? So you can see right here, what have we seen in ES? We've seen basically 2 setups so far in 2 hours, right? Or an hour and a half. You had this one here. Actually, there was 2, but this was all in the same area, right? And then you had this. Other than that, this stuff doesn't mean anything as far as market moving, right? So that's what you got to be careful of as well. All right. So again, I could have held that ES, but that's not how I trade. I just know how powerful these lugs are, and that's the reason I got long the first time. We did bounce off it. Now we're through it. Now we should be getting new lugs.
S&P iceberg by ES 700 contracts.
No new lugs yet, but here comes another setup. You can see the sweeps. Someone just dropped in a bunch. They ran right into buy ice. That's 500. This is another 200. So he read off 700, Mr. Computer Guy, because he's taking, so I have this on reset mode. So it's taking into consideration that, and it's putting them together because it happened so fast, right? So I can't draw this zone with the reset mode because you can add these up, right? Especially with this sweep / snake here, white snake. So what I'm going to do here too is I'm going to delete these zones because we definitely got an ATR above there. This is the sell ice from earlier, and we're now ATR below them too. So but you see how well, like when we were up here, see how I didn't screw around? Like this should have held. This buy ice, if my bullish sentiment, if the bullish move is going to continue, you see buy ice come in, this should hold and move higher. I know from trading these so many times that if it gets below there, that is not a good sign. I am out, right? And I just saved myself 30 points by not just holding on and hoping that it comes back, right? It's like I'm out, wait for my next setup. Again, I got the squat guy on, but it really makes no difference because by the time something comes out, the market's going to rip in your face anyway. So we'll just draw this. It's not a ton. I'm not really excited about drawing this, but the point is I need ATR retest either way here because we're below we're below the blue lug, and I'm fully expecting new lugs to populate here in each second now. So that's that zone. So on Sierra chart, you got to refresh this a lot of times. So that's why I keep hitting this connected button, and we still haven't built any new ones. So just waiting on that. Let's look where we are in the big picture. So this is the stuff we talk about every single day in the room. This is number one stuff that you want to know where you are in the bigger picture, right? So all markets are balance areas and directional conviction. Balance areas, directional conviction. Balance is two-sided trade, right? All this is traders placing bets. Some get long, some get short. Some get long, some get short. That's what a balance is. When it moves out of there, the guys that are short have to puke. That's a directional conviction. Another one. Some get short, some get long. Short, long. When it breaks out of there, directional conviction. Came back, retested the bottom, failed. Then what do we do here? Another balance. Some get long, some get short. Long, short. Who wins? Shorts. Guess what the longs have to do? Puke. That's what that is. What do we do? Came back, retested the bottom, failed. This thing's going to zero. Being sarcastic, but this is not looking good at all for equities. So that you want to know where we're at in the bigger picture to come up with your thesis, then you drill down to your daily stuff, right? So it doesn't surprise me.
TC 153 contracts.
Let's go. I'll go look at that in a second. I'm not real excited about trading that thing with these headlines either, but doesn't surprise me that this never made it even close to the lug into this, right? I took the long, because I'm a day trader, right? My day trading stuff told me I can get long, but it doesn't surprise me that happened, that buy ice up there got smoked because we're in a bearish state, right? That's what I mean. You have to know overall. It doesn't mean you can't take longs, but you better know, okay, wait a minute. We broke down from this most current balance here. And then all we did is basically retested the bottom yesterday, and now we're moving lower. Yeah, unless we get through this high volume node high volume node is just where the most trade occurred, usually in the balance area, right? That's when you can expect a big rip. Until it can do that, you have to expect it to do that. That's the stuff you need to know as a trader, right? There's your new lugs too, by the way. See them? Yellow. Now we're right at yellow, so I have to wait for ATR retest either way here because we're right at directional yellow. But me knowing the bigger picture stuff, right? I know the likelihood is we're going to get down to here before back up to here. But we could pop up to here, but I'm still bearish until long term. It just helps you too, right? So if you're in a trade, we're day traders, right? We're not in a trade. It's like, yeah, I can look at this, and this is the problem with you trading on bar charts only, right? So yeah, I could bring my 11-year-old daughter in here and she can tell me, this looks not good. Right? So you get short, it doesn't look good. Okay, you're shorting here. Well, where's your stop? Well, you got to stop up here to make sure it can get, otherwise it can just play games for a couple days, right? So that is not conducive to day trading, right? So I'm not saying that's how you trade this. You just want to know. So when you do put on a position, so say this works out as a short, I can say, you know what? This thing is going to really motor down. I can hold it. Right, because I know the condition's bearish. So that's the point of that, is you want to know where we're at in the bigger picture of things, right? So like gold, before we even bring over the chart, you can see here this thing's been pretty vertical, right? We had balance here. Remember, two states. It's either balancing, traders placing bets, or conviction, traders puking. Balancing, traders placing bets. The longs here were wrong, puked. Then it came to this, try to get through, then we just built new balance. Now what do you see? Breakout. So this looks bullish to me, right? So what do we do here? Find the right color. Try to break out. All we did is retest the high volume node. This should do that. If it gets through this high volume node, then we're coming lower. We're coming down to these areas, right, in the bigger one. But I fully expect, for the bigger picture view, and you get a buying tail. It's one of the four conditions of charting, right? The buying tail is also bullish. It means instant rejection. So when I look at this, I say this is bullish, right? I know long term, doesn't mean I won't take shorts, but I just know the bigger move is probably going to be up. So then I go to my short term stuff, because again, we're day traders. You had 100 there, you had another 50 there. That's not a ton. I'll draw this zone. I mean, threshold is 150 in gold, but I like to see much higher lately. There's your zone. It's actually getting smoked. I'll be back to ES on that zone. Again, I'm waiting for a full ATR retest on that thing, so I'm sure that hasn't happened yet. So that's that, right? So we got our zone. Next step. We already know this step. I already know where we are, bigger picture. Now let's look at the gold chart. What are we doing? We're above the L lug. It tried to penetrate, right back above. Full expectations back up here. And you can see how well these things work. Came up here, failure, back to the L lug. Now we're probably making another move up there. So I will take this trade aggressively out of here. Let's see where we're at here first. All right, so that's probably close to an ATR below that zone. 9.03. And again, this was not a huge volume zone. I mean, I'll still trade it, but this is not like seeing 1,000 plus, right? I mean, you did have these 2,300 sweeps, so that helps, meaning when the market comes back to this area. So just imagine if you're the trader here, right? Imagine you're sitting there, you're like, yeah, I want to get long on this pullback, man. I'm a meme trader, whatever the hell they call them. The 20-somethings that just buy every dip that are getting smushed now, right? So say you had all your bids in here, you had, you're a big player. You made all your money in Tesla or whatever. You got 100 lots sitting here. You're like, yeah, I can't wait for this to get filled. And then this happens. Just smokes you, right? So the white dots are the responsive buyers. That means this, right? The bid. You just get smoked, and then it keeps doing. You're like, uh-oh, that's not what I thought was gonna. I thought we'd do that, and you're sitting there holding the bag right now. What are you thinking? You're thinking, please come back. I promise I will get out of my trade. Please just come back. I won't be greedy. If it comes back, then I'm going to peel out, and that's the retest failure, right? So my point is, this was enough. The ice wasn't that big, but this is enough where enough guys got run over. You will watch. It will probably come right back up to here, and then it'll probably do that because these guys that got smoked need to get out. Whoever's still holding their breath are going to peel out when it gets back up in that area. And that's guys, I know it's simplistic and I know it's hard to believe. Trust me, this is what trading is. It's understanding the volume, it's understanding the big money, it's understanding what the dumb money is doing, it's understanding concentrated volume areas and taking advantage of it. Right? So here's your retest. Let's see if we got an ATR. What did I say it was 9? I don't think we got 9 points, but we did not. We only got 5 points. So I'm not going to take this short yet. I needed to see full 9 points ATR, then retest failure. And I get an 80%. But just watch these. You can watch them for yourself. You'll see them all day, every day. Big areas, sweeps, stops, ice, runs right through it. When it comes back, rejects it because the guys that got crushed are getting the hell out of their trades. That's how trading works. And all you got to do is think of it like it's you. What would you do if you had 2,300 contracts here and you got run over? Would you? And you're holding your breath. Say you're working for a trading firm. Like this is exactly what would happen to me, right? I get run over. And it would do this, and I would have my loss limit for the day was supposed to be $100,000. That's the most I can lose on a day. And then my risk manager is supposed to shut me off, right? So this happens. Now I'm sitting here literally sweating bullets, like, oh my God, if this goes another 2 points, I got to dump, which is probably what this was up here. Regardless, then it starts to come back a little. My phone's ringing, risk manager's calling me. I'm getting on the phone. I'm already pissed off. I'm like, yeah, I know, right? Because they're like, are you okay? Because they want to make sure you're not on tilt. Right, tilt means you're just not your normal self because you're emotional and you're getting your ass handed to you, pardon my language. So I'm like on the phone with them, getting mad, and I'm like sitting here praying, like just please come back to where I got run over, and I promise God, I promise I'll just get out. I won't be greedy and hope it goes back up. I'll just get out. That's what goes on all day, every day. Trust me. I hope you guys like that story. The bad side of that is when your risk manager doesn't stop you and your stop loss is supposed to be 100 grand and you lose 800 grand. That's the bad part of that story. We've talked about that many times too. I don't want to get into that and get all frustrated, but so the point is as well, we've talked about this, might as well rant about that as well. So you should be with a broker that will stop you out for the day if you lose too much money, because it is easier said than done, and any trader that's been trading long enough knows exactly what I'm talking about. It's easy to say before you start, okay, man, if I lose $2,000 today, I am done. There's no way I'm going to lose more than that. And then you go down $2,000, and most traders are the most competitive people on the planet, and you're like, you feel like you've been violated and taken advantage of, and most times you're not going to quit. And then you get emotional, and you see your thing. Then you keep trading. You're down 2,000. Then you go down 4,000. Then you're like, well, screw it. Now I'm not. My account's only $7,000. Might as well just let it ride. And then you lose your entire account in one day. Trust me, happens all the time. So you need to find a broker that will shut you off a predetermined stop limit for your account for that day. You should not be losing more than 5 to 6% of your trading account in a day. That means for you guys that are mathematically challenged, if you are trading off a $10,000 account, you should not be losing more than $500 to $600 in a day. And I know you little greedy dudes out there are like, well, that's ridiculous. That's fine. You may get away with this for a while. You may go down 1,000, 2,000, then make it back. Eventually, you are going to get smoked and lose 50, 80, 90% of this amount in one day. Trust me. Please trust me. Okay, this is what I'm telling you when I say that I lost $800,000 2 different times because my loss limits were not respected by me or my trading firm. Right? I'd have another if I would have stopped at $100,000, I'd have another $1.4 million to my name. Right? So take it from me, find a broker that has a predetermined stop where you just get shut off and you cannot trade until Globex opens at 5 o'clock that night. I know, trust me, it sounds shitty, pardon my language, but you got to do it. You've got to respect those types of rules, or you are not going to be around to trade. All right, sorry, went on my usual rant. That stuff gets me going just because of my personal. Again, please, that's what I tell my room every day too. Please learn from, even when I'm trading live, like, and I make a mistake, learn from my mistakes. You don't need to go through that pain. You know, I still some nights wake up in cold sweats of the money that I threw away because I didn't respect my loss limits at the time, right? Because I was a young big trader back then, right? It's like, oh yeah, I know everything. Yeah, I know everything. I know how to drop $1.5 million when all I got to do is get up and come back the next day, and I'd be totally in another mental state, right? Take it from me. Any questions, Bruce? There's really nothing going on right now. That's why I'm ranting. You know, we're stuck in this zone in gold. Soybeans I actually got filled on the long side. So I actually got to put this stop in now. Let's double check our ATR. 4.02.
Yeah, it looks like I'm just trying to get through some of the questions here. We got some things.
How many times have you heard these stories, Bruce?
What's
What's your
that?
guess? 80. So how many times have you heard these same stories? 80 times, 100 times? I mean, you've literally listened to the same thing. But it's just, I mean, I'm speaking of my experiences, right? It's like I talk like there's new members on here because there are, right? So if you've heard it all before, well, then it's fine because all it's going to do is drill it into your head to do what I'm telling you to do, so you don't have to go through the pain and anguish I've gone through. So
Yeah,
3.21 is the.
I mean, I think what always amazes me. I mean, I'm kind of fascinated by it. So you're getting people like your rants, but what I find fascinating time and again is just how simple and straightforward your and the clarity of the strategies and other traders too. I mean, like, it's so simple, and they're looking at, it's not rocket science at all. You're thinking like there's got to be a lot more behind it, and there's not. It's just you're looking at your levels, and then now you're looking at order flow and the auction to understand, to get an edge at your level that you're already watching anyway.
Right, and this is the thing. You hit it on the head, right? Like, there are so many people on here right now. Like, this is garbage. This is too easy. This is too simplistic. There's way more to it. This is a perfect segue into a guy that I'm mentoring. We just the other day, and I know the type. I've seen it for 20 plus years. That, and this is exactly why trading is so hard for most people and really, really intelligent people, right? Is because the really, really intelligent people, they need to have every single thing explained to them at all times, and they just can't like accept things, right? So it's like every move in the market, they need to know why that happened, right? Guys, it's just never going to happen, right? So, you know, that's why guys like, like doctors that retire and they try to get into trading, scientists, things like that. Most of those guys fail because they're almost too smart for their own good, right? They're just questioning everything and they don't trust things. And so I was going through this mentoring session with this guy the other day, and he's a bright dude, right? And that's part of his problem when it comes to trading, because when it comes to trading, you have to shut off that part of your brain where you're questioning every single thing, right? I'm like, listen, he's questioning, and that's fine to have questions, but it's like, then he just kept questioning, and you can see it. He's like, well, what about this? And what about that? It's like, dude, just trust me on this. I've been doing this, watching thousands of these for many years now. Just watch it and trust it for now. And then as you get better at this, then you can put your own spin on things. But you don't need to question every single thing that I'm showing you. Like, well, I don't understand. Well, there's a perfect example, right? When you see like the iceberg. When this first came out, and Bruce remembers this well, there's actually another software company out there that was bad mouthing and saying, oh, that doesn't work, that doesn't mean anything. The ice means nothing. You don't know what that firm is doing, that big fund is doing there. They could be hedging options. They could be getting out of position. You don't know that. You're never going to know. It doesn't matter what they're doing. There's two sides to the trade, right? So you trying to understand what this is and why it's there, it's useless. It's fruitless. You're wasting your time. You just need to know it's there, and you need to know the market reacts to those areas. That's all you need to know. It doesn't get much simpler than that. The more you try to dissect it, the worse you're going to do. Just like having these traders that need all this certainty in their trading, right? Read Trading in the Zone by Mark Douglas. He talks about this at length. This is all he talks about. Traders need certainty, so they think the more crap they throw in their trade, on their charts, Bollinger Bands, MACD, RSI, blah 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 blah, right? And then you go to put on a trade, like, wait a second, well, this is telling me bearish, this is telling me bullish, and when you finally can pull the trigger, then it starts to go your way. You're like, well, this is a bearish line here, so I should get out, right? So it's like, guys, I'm telling you, make it as simple, stupid as you possibly can, and you will see immediate results, right? And you can't get more simple, stupid than just watching volume, watching the market react, having rules, and following your rules. That's it. That's what trading is. The more you try to interpret things, the worse you're going to do. Again, please trust me. Please. Please. Next question.
That was one of my favorite rants so far. That one was.
I'm on fire today with the ranting.
Yeah, that was a good one. Let's see here. More questions. Yeah, exactly. I mean, people, confirming or agreeing with you here.
I'm never wrong, so that's probably smart.
That's right. Well, first we know that, and
right.
then one of the things that we get in here with Scott is being able to peek over his shoulder. Scott, why I bring this up is that you had mentioned that trust me, or I'm telling you, or is based on your experience here. That's what so you're getting that experience here by watching and attending the webinars. And your trading room, and you can learn from that and understand a perspective here. If that perspective works with you, then great, implement some of those things. Likely it's going to be some of your own insights and what works for that individual trader. That's a really important element here. But being able to see.
That being said, I mean, interrupt you. I'm going to. Yes, it's your perspective, and traders will come into the room and they'll be like, they'll cancel, and they're like, well, it just doesn't work for me. Well, what doesn't work for you? I'm not saying you have to trade exactly like I'm trading, but there is no. Again, this is the science. This is not. There's no like, oh, I don't think that's important. Right? That's what upsets me the most. Like, I'm not saying you have to trade exactly like I do with ATR and everything else, but there is no disputing this. So you can't just pretend this doesn't matter, because it's the number one thing that matters. Real-time volume is what makes the market. That's what makes the market move. So for anybody, I don't care what system you have, and that's fine. You can implement this. If you implement this stuff with your system, it's just going to be better. But don't pretend like this isn't for you. Well, if it's not for you, then having all the information is not for you.
Yeah, exactly.
Go ahead, Bruce, sorry.
Exactly. Well, that was another excellent rant there.
The other thing too, before I forget, so the guy I was talking about needing to know everything about, well, why is this, and he is new, so I'll give him the benefit of the doubt. But when we're talking about the setups and stuff, just accept it until you watch a few, right? So my analogy I gave him is like, when I walk into a dark room, and I think this is in Trading in the Zone too, and I turn on the light, do I need to take that light bulb out and dissect what's inside and why that light went on? No. I get what I want. I turn on, I flip the switch, and the light goes on, and I can see. That's all I need. That's all I need to know. I don't need to know how the light works, right? I'm not saying you don't want to understand why this works, but you don't need to be like understanding every single pop in the market and blah blah blah, and why are they doing this? You don't know what they're doing. They could be hedging, blah blah blah. You don't need to know that stuff, guys. You just need to know that, guys and girls, you need to know the area and that the market reacts to. That's it. Just like you don't need to know how a light works to have the benefit of light. How's that? Was that a good rant too?
Yeah, you're on fire today.
I'll let you talk.
Well explained. I mean, my overall point was that I think for a lot of people, seeing a professional trader trade will prove it to them. So now they don't have to kind of like who's the wizard behind the curtain. And that's the benefit of these webinars, and like you said, your trading room. So let me put the your trading room, etc. information into the chat here on YouTube.
Right, and then jumping from indicator to indicator, and this one there, again, a guy that I was mentoring last week, he was showing me what he looks at. He's like, well, today I brought this up and I was trading off of this. I'm like, what do you mean today? Like, you don't usually do it? No, I just figured I'd see if if this worked. I just saw this indicator. I'm like, it's perfect because it's like he almost doesn't know better. And this is why traders fail. Like I'm going to put this indicator on this one. This one's going to make me a better trader. Now let's put one more on. And then before you know, you got 70 indicators on your chart, right? So, yeah. All right, so literally nothing's going on, guys. So that's why you're getting the full wrath today. But let's see if we can get an ATR below here. And here's another sweep / snake, white snake. So this is not threshold, right? So there is, I hate to even say this because I don't want to confuse people. I don't want people starting to trade less value for the setups. But you could say, one, it's really died down, right? We haven't seen any sizable icebergs. This is close to 600 with a sweep, and it is 1024. So I'm going to show you something else too. This will be a whole nother rant, might as well because something's going on. It is this time of day where you can say, okay, this time of day slows down. I'm going to use 600 as my. That's fine. I highly recommend against it. I highly recommend you don't do that right now until you understand what you're doing, because it still may not matter. I don't do it. I still look for 700, but I'm just giving you an example. So speaking of that, let me bring up this, show you guys another eye opener from my mistakes. All right, so this is, you guys can get discounts to this on my website. There's a bunch of discounts on my website. Click on the banners, everything on there you get a discount for, except for like Rhythmic, I think. Let's see. Here's another mistake that you want to learn from. So this is my, so I switched to this in early December. This thing is like, I used to use TraderView. This is like TraderView on steroids times a million, right? So this thing is incredible. So actually, let's see if I can. My biggest weakness is you want to go through, because it's harder for me because I'm doing the trade rooms and I'm talking nonstop like today, and you get to the end of the day and then you got to go in and put in all your charts for your trades. But I've done it a couple times, but a few times for bigger trades. I'm going to get better at this, but I wanted to show you guys like this was. Let's see, this is February. I just wanted to give you an idea like what this thing will show you, right? So it shows you your entries, your exits, obviously, but then it shows you the chart. It should show, yeah, so you can see the entries, exits there, and then did I put so I put, and then you can go and you put what you saw, right? So this is the same stuff you guys are watching now. So I saw, again, I don't remember what this was. Obviously, it was a month ago. Oh yeah, so this, remember I told you there are instances where I will get in the trade in the middle of the zone. This was one of them. Again, I highly recommend you don't do this till you understand what you're doing. And you can see the black mamba here, 6,000 sweeps. That was part of this stop run. And then there was buy ice here too. This is the rare 6 setup. It's like a unicorn. We call it Step Brothers in the room. The room actually named it. It's the 6 setup that I've added. Anyway, we got ATR. We retested, but when we retested the zone, I knew there was enough volume here with my buddy Step Brothers setup. This was, and I'll show you here in a second, yellow lug and VWAP. There was enough confluent where I got long here, and then I entered traditionally as my 80% of an ATR, and I held it, and then an opposing setup came in, a stop run, Dumb and Dumber, and then I got out when it fell out of there, and I made the profit, right? So
S&P iceberg by ES 700 for contracts.
I'll come back to that. Let's see what's going on here. All right, so once again, this is like, again, I have this on reset mode, so it's, the spikes are close, like right next to each other, and it's all in the same area, you can just add them up as one iceberg, right? Just be careful, like if you see 300 right here, and then it goes up here, and then you see 400 up here, well, that's not a same area. You can see this is one house too, right? Look at this iceberg here. You can see the line. That means it's one house getting filled. Right. Let's draw this. So I'm going to make this a different color so I don't get confused with the zone above. Even though this is, you always want to default to the most recent zone, right? I usually use dark blue for my double whammy setup. And the double whammy is just stop runs, which is the dumb money, into the smart money, the houses are the big money. That's a double whammy. So it'd be like a sell stop run into buy ice, right? So that's what I usually use that color for, but we'll just do it now so it's not the same color as this zone up here. All right, so that's step one. I'm pretty sure we're still on that yellow lug or real close to it. I'll come back to this stuff here in a second. So we're below the yellow lug. And then you see this is baby lug right here. So this is going to be, she calls them targets. So you can, if you were short this whole time, you could, again, I got out of the blue lug because I don't mess around. I wait for new lugs because trust me, there's always going to be another setup where you can, almost always, that you can get back in the trade, right? I just don't mess around hoping that we build new lugs. And that's why I got out here, right? So we are below this lug. So I guess I could go short aggressively out of here. Check the ATR, 8.69. So aggressive is 80%. 8.69 is 6.95, so it's 7 points out of here. Could be aggressive. Oh, the other thing we want to watch too. Again, I don't want to be throwing a bunch of stuff at you because I just told you guys not to have 45 indicators, but this is the stuff that you want to pay attention to, right? This is spot gamma. This is his new hero. So it's available on Bookmap too, but I just have too much stuff coming. I have too many contracts that I'm watching, and when I put on the MBO or the hero on my Bookmap, it freezes it up. So he's now has a standalone product on his website. So you can see here, this is showing you the market. And this is real time. Here's the markets in the black. This is the one thing he needs to fix. I need to email him. Like, I'm sure he already knows, but you can't like scroll this down. Like it just goes off the chart. It's like, okay, where's it at? Right? So, but you can see here what's going on here. So you can see these are the call. Actually, these are puts. These are calls. So actually, they're not even really buying calls heavily. Let's see. Well, the total line is what is the best way to look at it, and you can see there's definitely a divergence, right? So when you get divergent, and this is the mistake I even see in the book. There's a hero room in the Bookmap in the Discord server that you guys are into, and I see guys complaining all the time. This thing doesn't work. It's not a blah. Guys, this is not a red light, green light thing that you use like the volume setups. This is something kind of like bigger picture stuff, right? So you just want to keep an eye on this and know, okay, there's a big divergence. They're buying calls, selling puts, and there's a huge divergence. So when you get to important areas, either spot gamma areas, let's see which one. Let's see if there's one down here. Right. So say we sweep down. It doesn't mean this can't keep going, right? So this is my point. If you were to trade off a divergence right away, where you looked at this thing, this is why traders are complaining because they don't know what they're doing, right? And I don't claim to be an expert at this either, but I just know this isn't red light, green light. So what's to say you didn't buy this divergence when we were like right here, right? You would have been killed. It went down another 30 points. So it doesn't mean you just hop in along because this is diverging. But when you get to important areas, and he even says this if you watch his webinars he put out too last week, when you get down to important spot gamma levels where there's high concentrations of options, those are the areas where you're probably, so if that put call line keeps going up and this market keeps going down, then we hit this area, that's almost a guarantee, especially if you get a volume setup, that we're going to bounce off of there, right? So that's how you want to keep an eye on that. Do not think it's a red light, green light, because it's not. I just wanted to show that too. Just know there's a divergence. So if we swipe down, turn this down a little bit, you can, be ready to pounce down here. And here, what else do you see down here? Which way do you think we're going? We talked about this earlier. Let's see. Black hole. No liquidity. 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 We do this every webinar. We always make bets that we're going to hit liquidity, and we do it almost every time. where do you think we're going? Again, this is the big money that has been in there forever. If they've been in there forever, what does that tell you? What's the number one thing that tells you if they've been in here forever? That they're willing to get filled, right? If something comes out, if Putin sets off a nuclear bomb, we're going to go right through this, right? That tells you they're willing to get filled, right? So this is not people putting in orders trying to scare the market away. This is guys that want to get filled, meaning this is where we're going because this is the big money and they will get the market to go down to these prices. Trust me. So just like we looked at the bigger picture structure, this is the same stuff. You look at the big, we already know it's bearish. You look at this, well, that's bearish too, right? What isn't bearish is that put call ratio. So it doesn't mean you just get long here. It doesn't mean you don't take shorts, but just know if we spike down here and we fill this, we fill this, we fill this, and that thing is still spiking the other way, that we have that divergence in the put call, and we're at a spot gamma level, you can bet you know what, we're probably going to do a bungee jump and spike right back up, right? So this is just information, right? So that's why I'm actually okay with shorting this. I know there's a put call ratio divergence, but we're going to hit this liquidity and it could happen right now. So speaking of that, let's get our order in. 8.4 is the ATR. 6.72, so 6 3/4 points. I can short this. So that's 7 1/4, pretty much. 7 points is a quarter. So 0.5. That's where I will short that. So next I got to make sure I have the right size on, right? We were just talking about this. One, you want to have a brokerage that will stop you out if you're on till. Two, you cannot be trading bigger than your account size will allow. So for me to put this trade on, I know the ATR is 6.72, so let's just say 7 points. So 7 points and 7 points, meaning if I get in this trade, the way I trade these, if I get filled on this, my stop is going to go 7 points above this zone, right? 80% ATR. So that right there is 14 points. And then you have the size of the zone. That's another 5 points. So I'm risking roughly 19 points on this trade. So then what do? I go to my risk calculator. This is all available to members of my room. It's one of the perks of being in my room. You go to 19 points. You can find these I'm pretty sure you can find these on the internet too. But right there from my account size, right? And if you have micros and you have a $13,000 account, it's the same. You don't even have to change this, right? It's just a tenth of the size, right? So because micros are a tenth of the size. So instead of putting on a full 2 lot of the E-mini S&P, you can put on 2 micros, risking 19 points. All right, so right there is a 2 lot that I can put on. And that's risking 1.5% of my account size on a trade. You should never be risking, again, more than 1.5 or 2% of your account size on a trade, and you should not be risking more than 5 to 6% of your total account in a day. Period. End of story. If you think you can roll the dice, you may get away with it for a while. It will burn you eventually. Take it from the $800,000 man. All right, so that's a 2 lot that I will short aggressively. All right, quickly, because I'm running out of gas here. What I was going to show you here on this P&L stuff. So I got in that aggressively. This is what I saw when we pull back to that zone that I just showed you guys. This is what I saw where I was aggressive. Actually, it was DBA, remember? Yeah, whatever. Did I not tell you that crew was going to come back and go fill that liquidity? It got front run the first time. Again, I would have been out of this trade if I was watching here. When I came right here, right? And the algos front ran. I would have been, the minute it started running away, I would have spread this out. I saw blue, I would have been out. But anyway, now here we go. Now it's going to come down and fill it all. That's the game. That is the game. That was a sweet smoking. So anyway, when we pull back to this, it was confluent with yellow lug, DVA, DVA stands for daily value, which is just one standard deviation from VWAP. I was willing to take that trade right in the middle of the zone. I don't recommend you do that until you figure out what you're doing. And then we got that. And then up here was the Dumb and Dumber, and I got out of the trade and made 30 points on the trade. That was on my trade room too, I believe. All right, so what I wanted to show you here, most importantly, this is my P&L. Again, since the beginning of December, since I switched to this program, which I highly recommend. This thing's awesome. This is my trade. These are my trades. So you can see here. And here's another thing, eye-opening, right? My trades that I put on this, on the Bookmap webinars and room trades and everything else, 44% win percentage. You would think I would be getting killed. Not so much. This is pre-commission, this is after commission, right? But so this shows you can be less than a 50% trader and make a living trading, right? And I'm not even trading big. This is trading like, especially in this volatility, I have like a 2 lot on an ES most of the time, right? Or 1 lot in NASDAQ. So it's not like I'm trading, guys can look at this and say, well, you're trading 50 lot. I'm trading 2 lots, right? So that shows you can make that, trading that, or that, right? That should be refreshing and motivational for all you guys. So let's see, Bruce always likes these stats. Here's your hold time, Bruce, that you love, right?
Yeah,
So
yeah,
let's see
this
our
is
hold time.
excellent. It's so good to see, like, how you are holding. I mean, like, a lot of people come into these webinars or come into like reading order flow with expectations like, oh yeah, I'll be scalping several positions a day or whatever, and then here's your results. Average holding time 2 hours. Average loser holding time less than an hour.
Right.
So it, really it debunks those theories with data.
So this is what I wanted to show you guys too, and this is most important. So when you use this thing, you can really start to dive into what's going on. Look at this. So this is actually very embarrassing for me to show, because when I was a big scalper, when I was making millions of dollars, after I got literally it handed to me for so many days in a row, or for over a month's period, and I finally said, you know what, I am not trading when that clock hits 10 o'clock, 10 to 10:15 Central, up until 12:30, 1 o'clock. I am not trading, because that's when, even back then, that's even before the algos were in full force. That's when guys start playing their games, right? Or the algos would play games, and even more so now. So when you get into these low volume periods, and you can even see it on here, and this is actually even relative volume. We talk about this in the room every day too. Look at the volume that's going on through here right now. This is relative volume, and it's bad. Volume usually dies down. This is relative volume, meaning at this time period, this is terrible for this time period. What you can look at in a different view, this just shows you how bad this volume really is, right? So it's like we're not even at, this is taking, so this relative volume chart on Thinkorswim is showing you the last 60 periods, 5-minute periods. So it's always going to obviously spike at the open because it's taken overnight, but you can see how low we are, right? So this is when algos go ape shit, as my grandpa used to say. They go crazy, right? And this is when they take all your money. So this is why you can see here, look at my day. This is over almost 4 months now, right? Look at this P&L and I already know this. This is why this is so embarrassing. I should not be trading at this time of day. 10 o'clock Central, $46,000, $47,000 of losing trades. 10 o'clock Central, or 11 o'clock Central, $70,000 plus of P&L, because I am trading at this time of day. And then, hey, look when the big money, look when the guys get back from lunch in New York and the big money comes in, right? Look at that. This is after hours too, but the point is, when you start to track your stuff, you can be like, you know what, Scott was right, or your poor time, maybe you might not trade well on the open. You say, you know what, I'm not going to trade on the open. Once you get a big enough sample size, you can really start to see this stuff. So this P&L, take out 70 grand, it'd be over $100,000 trading 2 lots in 3 months, 4 months, right? Like, guys, this is trading. This is, if you want to be a professional and do this for a living, this is the stuff that you need to pay attention to. Why can't I find that? Right? Add 70 grand to that since 12.6. That's a really good return if I just got out of my seat and got the hell out of my office and just left for those 2 hours. So, and again, I'm trading 2 lots. So that was the whole point of that, for you guys to open your eyes, get this. You can go on my website, get discounts to it, but you have to have something like this if you're trading. This, and you need to have a stop limit with your broker. Before anything else, before you understand one bit of this stuff, that's the stuff you have to have in place. Then you can start to really hone in on your trading. But if you don't have that stuff in place, you're never going to make it anyway. Period. Even as much as I know and how well these zones work, if I did not have a stop limit for the day, and a stop limit for my trades as far as how much I'm willing to risk, if I'm putting on like a 20 lot in this instance instead of a 2 lot, I wouldn't be doing well either. So it's going to catch up to you eventually. Trust me. Any questions on that, Bruce? We're about due for a headline here too, aren't we?
I think we're
There's
all
only about 12 a day.
caught up on questions.
All right, well, I hope that's hitting home for some of you guys because I know majority of you that are not making money, you're making those mistakes. You eliminate that stuff alone, you're going to start making money. All right, so actually gold here. Here we go with the headlines. Let's take a look. I've been going for a while, so I'm going to get off of this pretty soon. But let me just take a quick look. I think we're above the yellow lug in gold, if I remember correctly. Yep. So we did get an ATR below here, I believe. ATR is 40 ticks. You see that? Just move the decimal place, 40. Bottom of the zone was at 2009, 90, 64. Yep, so that was almost 60 ticks, 50 ticks. So we're definitely at an ATR. So now I will we are above the yellow lug, but I will take shorts as long as we get a full ATR retest failure. And I am full aware that this is, we already talked about this. This is bullish longer term. I'm a day trader. You could say, so this is the point of having playbooks and having scenarios where you just won't put on, like right here, yeah, the volume's saying short, but we just talked about how we broke out of this balance. We put in a buying tail. This is not the best short area. Right? You know, I'll do it, but I don't have high expectations. So you could just say, you know what, I'm not taking shorts unless we do a failed breakout and get to the high volume. That'll take shorts. But right now I'm just looking for longs. And that's fine. You'd probably do even better. My winning percentage would be way better if I did stuff like that, right? But I'm in my room and I want to show these setups and so on and so forth. It's not an excuse, but I'm just saying you can make your win percentage way better than that. You're not going to get 70, 80%, 90% trading as a click trader without, full-time scalping on an algo. And you're not going to be able to scalp clicking a mouse. Trust me. Please trust me, because that's how, if you could do it, I'd be doing it, right? So point is, your winning percentage, if I got up to 60%, that P&L would be like off the charts, right? And I know I can get at least over 50% by just not taking certain trades. And this would be one of them where I'm not taking the short because what I just showed you guys on the bigger picture stuff. That would be a well-advised thing to do where you just say, you know what, gold looks very bullish longer term. We're above the yellow lug. I'm not taking short setups. I'm only going to take a long setup. But this would not qualify, so you got to wait for something new. And that's trading, my friends. Any other questions? I'm out of gas. A lot of ranting today. A lot of lessons. Hopefully you guys learned something. Not a ton of trading, but it is what it is. If it's there, it's there. If it's not, it's not.
Yeah,
Still long beans.
no other questions, Scott. And yeah, just need to say here, since we're on YouTube now and broadcasting on YouTube, that yeah, please subscribe to the channel. Hit the subscription, and also if you like the webinar, click on the like button there. It's very helpful for us. So yeah, other than that, the people have your contact information as well as the details on some of your courses, etc. And we do this every Thursday, so we'll see you next Thursday, Scott.
Yep, cool. Thanks. Hope you guys learned. Again, please learn from my mistakes. You don't need to go through 20 years of learning this stuff, getting your head smashed against the wall. Learn from my mistakes and don't make them, right? It's called, what do they call it? Modeling. Model me. Don't model my mistakes. Just learn from them is what I'm saying. All right, that's it for me. I will see you guys next Thursday. Have a good weekend.
Excellent. Thank you, Scott.
Thanks, Bruce.
When I